Understanding the impact of the U.S. jobs report. The latest U.S. jobs report has hit the headlines, and its implications stretch far beyond unemployment numbers. This data could dictate the Federal Reserve's next moves, sway financial markets, and even affect your wallet. But what makes this jobs report so critical? It's not just about jobs. It's about understanding where the economy is heading and what it means for you as an investor, consumer, and citizen. Imagine this. The Fed is watching these numbers like a hawk, and so are the markets. A strong report could mean continued high interest rates, while a weak one might signal an economic slowdown. But what's the real story behind these numbers, and how should you position yourself for what's coming next? Stick around, because by the end of this video, you'll not only understand the data, but also how to navigate the financial ripple effects. And hey, if you're passionate about decoding the economic trends that shape our world, hit that like button and subscribe for more deep dives like this one. Now let's dive into the details. The U.S. added 187,000 jobs last month, slightly beating analyst expectations. The unemployment rate, however, ticked up to 3.9%, the highest it's been in over a year. So what does this mean? On the surface, the job growth looks solid, but the uptick in unemployment tells a more nuanced story. Labor force participation has risen, which is a good sign, but the quality of jobs being created is under scrutiny. Sectors like healthcare and hospitality are driving growth, while high-paying industries like tech and finance remain stagnant. This divergence raises a critical question. Is the job market as resilient as it seems, or are we witnessing a shift toward lower-wage employment? And here's where the Fed comes in. With inflation still above target, the central bank has been using interest rate hikes to cool the economy. A robust jobs report could give them the green light to keep rates elevated, making borrowing more expensive and potentially slowing down economic activity. But if the labor market shows signs of weakening, the Fed might pause or even cut rates, which could inject fresh life into the stock market. What do you think the Fed's next move will be? Let us know in the comments. Interruption time. Did you know that the average interest rate for a 30-year fixed mortgage has now surpassed 7%, the highest it's been in 2 decades? If you're planning to buy a home, this jobs report could directly impact your interest rate. Hit that like button if you're finding this breakdown valuable. Back to the jobs report. Wages grew by 0.3% month over month, aligning with expectations. But here's the catch. Real wage growth is still lagging behind inflation. This means that while people are earning more nominally, their purchasing power hasn't fully recovered. For consumers, this translates to tighter budgets, less discretionary spending, and a slower pace of economic growth. For businesses, especially those in retail and consumer goods, this could spell trouble. If you're an investor, you should be asking, which sectors are most vulnerable to this squeeze, and where can you find opportunities? Let's zoom out and consider the global picture. The U.S. jobs market doesn't exist in a vacuum. It's deeply interconnected with global trends. For instance, rising tensions in the Middle East and ongoing trade disputes with China are adding layers of uncertainty. Companies reliant on international supply chains are already grappling with higher costs and delays. Add to that the strong U.S. dollar, which makes American exports more expensive and less competitive globally. If you're in industries like manufacturing, agriculture, or tech, these dynamics could directly affect your bottom line. And let's not overlook the energy market. Higher employment often correlates with increased energy consumption, but geopolitical factors are pushing oil prices higher, creating a double-edged sword for the economy. Are you hedging against these risks, or are you doubling down on high-growth opportunities? Let us know how you're navigating these challenges in the comments. Interruption time. Did you know that small businesses account for nearly 44% of U.S. economic activity? Many of them rely on the health of the labor market to thrive. If you own or work in a small business, this jobs report could be more relevant to you than you think. Share this video with someone who needs to stay informed about these trends. Finally, let's talk about the stock market. Historically, jobs reports have been major market movers, and this one is no exception. The initial reaction to this month's data was mixed, with the Dow Jones ticking up slightly while tech-heavy indices like the Nasdaq dipped. Are you positioning your portfolio to weather these shifts? If not, stick around because we've got actionable insights coming your way. As we approach the end of the year, one thing is clear. The U.S. jobs report is more than just a snapshot of employment. It's a barometer for the health of the economy and a key signal for policymakers and investors alike. Whether you're a seasoned trader or just someone trying to make sense of the headlines, understanding these trends is crucial for making informed decisions. So what's your take? Is the labor market stronger than it looks, or are we heading for a slowdown? Drop your thoughts in the comments, and don't forget to like, share, and subscribe for more content that helps you navigate the complexities of the financial world. Until next time, stay curious, stay critical, and keep questioning the narratives that shape our economy. And remember, the best investment you can make is in your own knowledge. See you in the next video.